It's Saturday afternoon, the 24th of September. This is the weekend webinar, an eventful week indeed. Some numbers we haven't seen in years. We'll get to that in a moment, but you can see from the pattern that since the December high in the S&P 500, actually it was the first couple of days of January, wasn't it? January 4th, we hit 48.18. The actual NASDAQ hit a high, if you look at the NDX, I think in November. Yeah, right here. Remember the 22nd, 16,765. In either case, both times after, it was kind of intramarket divergence if you take a look at it real quickly. S&P makes a new high. The NDX fails to confirm here. They both roll over in a three-wave fall. Some people have called this a 1, 2, 3, 4, 5 with a truncated fifth wave double bottom. Then the rally got right to resistance from the February high. Double topped and rolled over hard in April, May. We had a bounce to resistance and another rollover, which completed a 1, 2, 3 and a 1, 2, 3, if that's the way you read it. And again, some people call this a truncated fifth. I call that a truncated fifth potentially. I'll also call it a V bottom with a platform. There's your breakaway gap. There's your breakout. If you take a look quickly, you'll see how this consolidated above the moving averages as they crossed over. And we had a wonderful rally from that point, 38.90 to 4,300. About 400 points, 10% rally from that point. But ensuing rally, decline, which comes right off of the declining tops line. Take a look, 3 points, 1, 2, 3. Now enables this as a 1, 2, 3, 4, and the fifth wave down. Now the fifth wave could be truncated or shortened or double bottomed, or this is a 1, 2, 3, and we get 4 and 5 that plunges down into the 34, 35 zone, which I've been saying all along is a possibility if we break the double bottom. Right now at about 36, 36, 36.40 range. The low on Friday, 36.47. So either we bounce sharply from here, and the oscillators are certainly oversold. Let's take a look at that. McClellan oscillator 2-1. Is close, and this is the important part. Not only did we gap down Friday, but we finished down at 243 negative. That's the lowest closing number in 7 years. I looked at it again. I could not believe it. The lowest closing, because each time it got down to that level, it became so oversold, it snapped back. But down here, where was that? 2015. Yeah, I think it was back here. We closed minus 246, then today's close minus 243. So that's why I'm saying this is the lowest level in 8 years on the oscillator close, which I think is just as important as where it reached. But I do think there's a possibility that we bounce and go a little lower, but we'll see if that occurs or not. I think we're going to bounce. Don't know if it's coming from an opening. I would love to see the market plunge Monday morning with a big negative take, throw the baby out the bathwater as I've been asking for, and then maybe turn the market around. So you've gotten the SPX, the NDX. Now let's take a look at the transportation, which is a perfect 1, 2, 3, 4, 5. A little more room to decline. Well, if it hits the exact bottom, if it takes it out, we could be down 11, 350 or something like that, 11.4. But it closed at 12.1, so there's a lot of room to drop a little bit more. But there's a gap here, and if we gap up on Monday, we could also get an island reversal. So I think Monday's important, very important for the transportation as well. Now the small caps, well, obviously not looking great. But I'll tell you what, they also double bottom similar to the S&P and NDX. Only the transportation looks worse. So again, in essence, it's a 1, 2, 3, and this is 4 and 5. I thought it was a 1, 2, 3, 4, 5, and then a retest, and then up we go. So this is, to me, indicated small cap breakout. But now with the market falling, they're coming down hard and fast. The low in June was just under 163. Friday's low 165. So we're at a point where either they bounce from here, or we get where we plunge into a low and then bounce. We'll see. But I think the oscillators are extremely oversold, to say the least. The percentage of stocks above their 40 plunged down to tagging under 10, single digits, for the first time in 3-4 months. And every time we've gotten down to that level, we bounced up. We have gotten down to a much lower level, so there's still the area, there's still a level below that can be reached before we actually bounce. But we're there, and we're close to it. Even the VIX finally started to show some life and run into the 30s for the first time in 90 days. But you can see that several times we reached 35, 38, but we haven't reached anything higher than, I think it was 40.77 back in late 20. So we're at an overbought reading, but can it get extremely overbought? Of course, anything can. Which indicates potentially a market bottom as well. So fear rising, oscillators, and by the way, we had a negative tick of about 1,300. So not quite the 1,500 I look for at ultimate lows, but the preponderance of charts that I saw this weekend that have broken hard, including some of the strongest ones, really had me going. Let's take a look at some of the ETFs I follow closely that indicate the market and the leaders. The SMH semiconductors, right back to the June low, right there. Right there. That low was 189.94. Friday's low, 189.47. It's pretty much right there. We bounced 3 points to close off that low, but still, we are at a place where the market needs to rally and double bottom, or they're going to come down and come down hard. And there's room to really drop in the semiconductors. Look how far they've come up in the last 10 years. So there's room to drop even further, but at the same time, oversold near term has me thinking we bounce in this zone. Financials smacked hard with the interest rate the way they were. We double topped back in 92 in August, and then came down bouncing, came down really hard. So from the 5 weeks ago, 92, we reached 55.82. Now the low here was 56.32. This one was 57. So the 56.7 range has been supported for the financials going back months now. And this is an area where they need to bounce. Now, if it's a 1, 2, 3, and we get a 4, and that's all we get, the fifth wave could really plunge this market into oblivion. But who knows what they want to do with this right now. We'll see. But my indicators are extreme, just to a certain extent. What about biotechs? Well, the XBI and the LABU obviously breaking trend lines. Kiss back, broke support, and closed at support on the XBI with the LABU being a triple, closing even below that. You can see how we cracked here. We're at secondary support in the 625 or 28 range. The low was 6 even, making a nominal new low before bouncing a little bit to 642. So again, we're going to find out what this market wants to do, but you can see how extreme some of these numbers are. So semiconductors, financials, biotechs, all in dire straits, but oversold. What about, I've been telling you for weeks now that I did not like oil, that I thought oil was topping. Look at that plunge in the USO. Head and shoulder top this week was ugly. It's not dropping from 73 to 64, closing 65.32. That's the lowest close since February. And a massive top is formed. If they take that top out, which it looks like they have already, last support is 63-ish, and then we're looking at 58 and below. Gush is getting smacked back hard. Of course, Gush is a double bull. As a result, the rollover was harder. Recent high, 197. As high as last week, 181. Friday's low, 113. That's how hard this dropped. Look at the gap down on Friday as oil dropped 5% one day. What's really in jeopardy here is the major trend line. And if I draw it this way, I want to just show you something. This is actually the trend line that was broken. Kissback, rollover. Key support right now in Gush. 100. And below that, we're looking at 94, 85, 75, and below. This market in oil, I think, is thrashed. Now we saw what happened here, and I don't expect that to happen, but we could easily do a major fib retracement on oil and get down to, in the 60s. And I would not be shocked to see that, on the gush at some point, especially if oil got in the 60s. But that's it. Be very careful. It's going to be bouncing around. It's very volatile, obviously, and a great trading vehicle. But it's the real play on the long side and gush may be over for a while. We'll see. We'll just have to see. Look, you can take a look at ERX. Same thing here. Look at that plunge and breakaway gap to the downside out of that channel. Very toppy looking pattern. This is the double energy bull for energy stocks. Individually, you'll see a lot of charts later that are pretty ugly. So careful on oil. Yes, maybe short-term oversold. We may get a bounce, but I think that's a shorting opportunity, quite frankly. And I'll have to just see what comes there. How about gold? I've been telling you for 6 months. Why is anybody in this room interested in gold? Look at that chart. Since March or April, plunge, bear flag, another plunge, break through multiple bottoms, another bear flag. It's a 1, 2, 3, 4. I said just 4 weeks ago, this at 27 looks like it could be 20. Well, we reached 22.20 on Friday, down another 5.5%. And that's the lowest level we've seen in a while. You remember this plunge though, and I'm not looking for that, but I wouldn't be shocked to see us get down around 20, 21, or maybe even down in the high teens before it's over. So, and we look at the multiple JNUG, if we look at that, you'll see this is a double bull. It has plunged below as well. And just since April, it's dropped from 95 to 22. If you look back multiple years lows, it's the lowest ever, which is almost like a UVXY type chart. This didn't trade at 36,000. It's reverse split several times. Okay, so that's where we're at. Even the UVXY now with VIX going up is looking better, but be really careful with this stock. Short term only, you can see it hit right at resistance price wise and 50-day moving average, but a move above 1260 on a short term basis could spike into 14, 15 zone or something of that nature. Be really careful. This has not been acting well until the last 2 days. Well, that covers gold. The gold, the oil, and some of the other oscillators and ETFs that we follow closely. There's others, of course, but I'm going to move on. We have charts to look at. There's a look at some of the charts that are going to look pretty ugly, in my opinion. Now, AEHR was a great swing for us here. Broke out of the coil and just went vertical, and we had, literally went from 9 and change to 18 and change in a very short period of time. Came down, bounced again. I put a swing on it, but it didn't last long and rolled over. I'm worried about this one. This is a break on Friday. Lateral price support, trend line, and moving average all in one fell swoop. If it takes out 13, sayonara, EHR. Well, we don't know yet. AKRO, unusually, with great drug news, exploded and has a wedge pattern, but we don't want to see this one either on the 25, 5.5. Recent IPO INPX with a big spike Tuesday, pullback Wednesday, and then Thursday and Friday, another good rally day. We traded that nicely during the week. It may have some more upside, but be careful. Really great looking biotech stock is Alexion in a beautiful rising channel from the April low when it was traded literally at 206. It made it all the way up to near 7, more than tripling, and it's still in a rising channel, although it has pulled back, like many biotechs. APA, there's a perfect example. When you look at the USO and the gush and the way they broke, obviously APA being a component broke very hard. In the last 3 days alone, we went from almost 41 to nearly 32, lost 9 points. Pretty heavy stuff. There's a quadruple or triple bottom near 30, a break of that, and you're looking at 25. This is what I'm talking about in terms of oils. Here's a stock that was in the low 50s. It's already dropped 20 points and looks lower. We'll see. The major trend line might hold it. APRN, beautiful V bottom right hand extension, then explosive move. We caught that one. It made it all the way up to 822, nearly doubling from the bottom range. Actually, it went from a low of 278 to 822, about a triple, and then plunged. And this stock hasn't recovered until Friday when it bounced a bit. but you know, that's coming from 822 to 395. Now lateral resistance at 465 may thwart this advance, but keep an eye on it. ARQQ base breakout, we put a swing on it. It ran right to the first resistance zone and backed right off with the market. I'm looking for this one to hold around here and go up again. BLUE with a nice inverse head and shoulder breakout, we put a swing on it. It ran nicely, got to the target, pulled back and wedged, broke out again. I put a swing on it again. It moved a bit, but it didn't roll over much. I mean, it didn't do that much. Stalled at that shoulder line or at that level of page 7.5. Came down to support. There's triple support here: trend line, lateral price support, moving average support. But any further damage over under 5.5, look out. Calyx, unusual strength. And I always point out unusual strength, folks, because I got to tell you right now, the stocks that act the best in a bear market or a bear phase are the ones that do fantastic when the market runs. If and when it does. The problem is if the market continues lower, a stock like that could cave. So what you want to do is stop under 54. If it gets above 62, it's off to the races into the 70s. Cano, we got lucky with this one. Beautiful base, rounding bottom. I put a swing on it. It exploded on Thursday from 5 3/4 to 9.5 in a day on takeover rumors. And it stalled and had kind of an inside day on Friday. I think stock goes higher. It looks very likely a takeout and maybe as early as Monday at around between 10 and 12. Consolidated Energy, a coal stock, has finally come down off its lofty levels. Look at this chart. We're talking 4 to 80 in a very short period of time. Well, maybe a couple of years, but still. When you're talking 20 times your money, you're bound to get some profit taking. The key support now, 58. I'm sorry, that's not right. 56. 57. Okay, so Clearfield was a great swing for us, broke out, and we put a swing on it. And it ran, and I mean ran for 5 weeks, giving us 60 points from 70 to 130 for the big pullback. Right now, if you look at the pullback carefully and draw your lines, you have what amounts to a falling wedge of support right there. So key support here. I don't want to see this thing below 86.7, and it's hanging right there around 90. Long-term chart is impeccable, but it's had 1, 2, 3, 4, 5 waves up. Probably a good long-term exit up in that point. Cogent, nice relative strength, pop, wedge, pop, wedge, pop, 5 waves. Now it's pulled back. Is it going to hold and go? Well, the 5th wave is always less reliable, so if we do crack, look out below, keep a stop. CPNG broke out. We put a swing on it. It worked wonderfully, but when it got to the target, it reversed and came down from the coil. Looked like it could break out. It was right at the apex until the market dragged it down. Right now, to support at 16. Careful, it's right near there. DraftKings broke out. We put a swing on it, ran to the target number 1. That was successful. It then pulled back to the moving average and bounced. We thought it was going to go again. Instead, the market dragged it down, and it's right on or near support. Matter of fact, if you draw the trend line there, it might be below the trend line support. With the market oil going down, the drip exploded on Friday with a breakaway gap on big volume, probably goes higher, targeting 24, eventually high 20s. We'll get to SCO later. Dust. With the oil, with gold coming down, the dust has been pounding it up as well. What a chart. Next target, 34, 35. Unusual strength in ELF, Beauty Products Company. We had a 1, 2, 3, 4, 5 wave decline followed by a spike up and pullback. This is the moving average crossed over. We had a V bottom at a right hand extended or cup and handle. It broke out there. It kept running, and it's still running until Thursday, Wednesday when it peaked out short term and pulled back. Really need this one to hold around that 35.5 range. EPOW. Well, it popped hard and ran from under $2 to almost 4.5, 451 was tagged. Came down and bounced, but the market dragged this one down too. Down 7 days in a row now. And right on support or near it right there. I need this to hold in this range. ESPR swing trade broke out and ran up to just underneath my target and backed up, but broke on Friday, it appears. It broke lateral price support and moving average, but it didn't break the trend line. Still, I'm concerned. EVAX, pop, pullback, pop. Very nice relative strength as well. This one jumped only 20% on Friday with the market falling apart. Very nice relative strength. Keep an eye on this one. Technically right now, any move above 3.5 and the stock might be 4 3/4, 5. EVTL, well, a nice spike on Friday as well. Broke out above the moving averages and got up near the testing area around 9, 910. Didn't quite get to reach 887, but close enough for government work. Resistance there. If it follows through, we're looking at 11 3/4, 12. Ford broke and broke hard this week on earnings and some statements as well. But we did a great swing on it from here, the breakout point to there, about 11 3/4 to 16. But now it's been stopped. Foot Locker, nice breakout, breakaway gap, popped to resistance, fill that gap and tested resistance 2-3 times, couldn't get through and backed off. Key support now, 32 3/4, 33. FREY, what a 5-way move. 1, 2, 3, 4, 5. And then reverse it hard. Be careful. We've seen some battery companies have big runs and get hammered. This one's very dangerous to me. 100% stop on the 13. First Solar, stellar, breakaway gap and a big one, a popping flag and a rising channel. Finally, after moving from low 60s, almost 60 itself, 60.96, call it 61 to 140, 80 points, folks, in about 90 days. Definitely due for a pullback, and Friday shows some weakening with volume increasing. Be careful. I like it long term a lot though. Fubo, pop, pullback, pop, flag. We'll have to see if it can hold. See key support 3 1/4, current support 3 3/4, resistance 5 1/4. Futu overall looked really good. V bottom with a right hand extended platform breakout. We did a swing on it. It worked well for a couple weeks. Ran all the way up to almost 58 and then came down and tested support and bounced. It's testing it again. You just can't afford to watch this one go into 36.5. Hudson's been great all year, but the pullback recently has pulled it right back on key support again. Watch for a breakdown if it does go any lower. INBX, great swing here when it broke out. It stretched up its way up right to my target. Got up to 25 and reached 25.5, and that's gotten hammered hard. In the last 7 weeks, 25.5 down to 1260. Friday was a good day, however, up 146 or 11%. Las Vine picked up. We may have seen the bottom of that one. INTA, nice base break and a pop and a wedge. Keep an eye on this one. And Friday up 5% in a lousy market at resistance. If it pops above 17.5, this could run into the low 20s. INVZ, nice base breakaway gap, ran up. We put a swing on it, ran to the target and backed off in a falling wave, 3-wave corrective to test the gap in the 50, held it, ran it back up to test the high, but couldn't get through with the market pulling it down now. I like the looks of this. Never gets above 6.5, looking for 8 and 10. ISSC, look at the relative strength on this baby. Huge move up, pull back, and now an ascending bull wedge. That's what this is, folks, in my opinion. Breakout above 9, 15, 20. We could see 10, 11, and 12. Real good Momo. There's the JDST, counterpart to DUST, both gold, and looking like this could be 20 and then 25 eventually. That natural gas is coming down. The KOLD is popping. You can see it's testing the early August high when it reached 17. Friday's high, 1691. We get through this level, 20 and 27 might be targets. Well, same thing with the LA, with biotechs dropping, the LABD's running. There's some key resistance up here in the 29-30 zone. If you get through that, you're looking at 35 and 42. LITM exploded Friday. Excellent day trade, up 38% in declining market, breaking out of a wedge pattern. The follow through, it says that 4 3/4 might be a target. Keep an eye on this one. LTHM and the lithium group took a hit and has broken its trend line. Careful though, there is some support at 29 and then at 27. MAX10 broke out, we put a swing on it, ran up, a wedge and broke out, reaching my target and then some, but reversed with the market last week. It's on the trend line. I need this one to hold in here. And perhaps if that's a trend channel, then I'll quote for a 1, 2, 3, 4, 5th wave to 34. NVRX, big drop, pop, and a nice flag right on the 50. Keep an eye on this one going forward. I'm not saying buy it. I am saying it's set up to pop if it goes again. Above 17.5 might be a good place with volume. MRSN, it's a 1, 2, 3, and a fourth wave pullback based on the market. It has broken the flag, and it's testing the breakout point from here and the gap. This should hold. If it doesn't, it's a stop. MRVI, coming out of a downtrend on Friday with the market falling apart. That's interesting. Up $1.27, 5%. Volume picked up as well. Keep an eye on this one. 28 and 31 targets. NARV, what a pop, and now a three-wave corrected falling wedge. Very bullish. And on Thursday and Friday, stock moved up both days. Targets 12 and 15. NRGD, the other ETF for oil, bear. Look at that breakout. Up 11 3/4 or 20% on Friday. Nutanix, breakout, pop, wedge. We put a swing on it. It didn't break out enough for me to say it was a good swing, but it was a small profit opportunity until it broke down. Rolled over for 4 days in a row and broke support into the gap. Might test 19 next. OPTN, check out this explosive move in 3-month platform. Obviously, it's a stop underneath 3 1/4, but a move over 4 1/4 could get you to 5 1/4 or a half. PACB, well, it popped. It looked like it was going to break out of a falling wedge. Couldn't get the resistance and backed off again. So it's double bottom testing in here. It's key it does not break 5. Targets are 7 and 9 if it goes. Pinduoduo, beautiful V bottom right hand extension and pop. Double top breakdown, inverse head and shoulder, but it couldn't get through the neckline again and backed off. Overall, I like to look, and I think it's a $100 stock if the market cooperates. Perion, disappointing, it has broken down and rolled over. I think the stock long-term is outstanding, but right now I'm not liking the pattern. PL, rounding bottom, breakout, immediate pullback, fill the gap. Don't like that either, although I think the pattern itself may be just in need of further testing or lengthening. Purple, big pop early in the week, got up to resistance at a triple top and pulled down. Keep an eye on this one. Support 370, resistance 440, targets are 5 and 6.5. Roblox, slight breakdown below the trend line, or is it? Matter of fact, when I look at this again, it's the tag of the trend line. I'm right at it. But it did break support, so I'm skeptical about this one. Keep your eyes on it. However, I think it runs back when the market does. Rivian, well, it looked like it was going to break out there and reaching over 40 again like it did there, but we double topped and pulled back to support. Key is you can't let it get under 30. Revance, 1, 2, 3, 4, 5 waves up with a spike on the 5th wave, now the falling wedge. It's less reliable, but it is bullish. If we do go again, 29 and 34 potential targets. Rhythm was one of the stars of the year for us as it ran from the 6 range to reach 30 and change, 30, 80, 30, 98, almost 31 before the pull down a week ago. Now, last week it spent consolidating before Friday's pullback action. Have to stop under 20. Sava, talk about a 3-day run exploding on what supposedly was good news. 29.70 to 51.59. 22-point run in 3 days, and then got smacked on denial of its story on Friday. We'll have to see what happens there. Here's the other ETF for oil, the Bear ETF, SCO, we follow closely. It looks like it's broken out of a base, but there is resistance at the 31.5 to 32 zone. If we get through that, it's a $36 stock. We'll see, had a margin seller apparently, if we've been told, late in the day on Friday, and they whacked it, but it's so thin. You can see that would bounce from 817 to 890 before selling in at 878. The long-term chart says it's at the trend line. Keep an eye on this one for further action. SGM out, that's a personal position. SGM Sigma Lithium, this is basically a 1, 2, 3. I don't think this is a 1, 2, 3, 4, 5. But if it is, then it's got dangerous up here. Lithium stocks in general have been pulling back. Friday, this got hit for 6%. Be careful, it's long in the tooth. The SOSX, breaking out of his base or breaking out his backup of resistance too. All these ultra bear ETFs have run up to resistance. This one as well or near it, top of the channel. As I said, there may be a little bit more squeeze to the upside on Monday morning, but we're getting close to it. I think a tradable bottom. SRTS, this is a stock I would keep my eyes on, folks. Institutional clients love the story. I love the chart. It couldn't get to the double top with the market and the condition it was in. It backed off from 15 to about 12. I wouldn't be happy under 11.5, but I think it's a buy in this zone. Remove to 15, 18, 22. TERN, nice little biotech with an explosive move, a three-wave corrected flag. Another pop to resistance at my target at 7, and then another pullback. Is there one more leg left? We'll find out. TMDX, what a great chart. And there's your breakout here, and that was where we put a swing on it. It ran from 35 to 55, and then pulled back down. It's right on support the trend line. Another ETF that spiked was TZA small cap, again, up near resistance. And the UVXY, again, up near resistance. Uber, which was looking great here, reversed and came down hard last week from a high of 32.5 down to 27, 36, right where support and the gap is. This has to hold here. It's near the trend line as well. Long term, I like it. Short term, I'm skeptical. VERV broke out. Right there is where we put a swing on it in the high teens. It made it into the 40 range, 43 from 19. And now the flag. Easy to stop on the 31.5, 32. Long-term chart looks great, but it may be in need of consolidation. BRAR coming out of a base and a long-term decline channel and coiling near the apex and near the 50-day moving average. Something to watch. Wolf, formerly Cree, came down hard to test support. There is key support here, 1034 zone. It bounced on Friday off of 105, finish at 110 plus. You know, over there, quadruple top at 125, we're looking at 140 and 165. But again, market, look for opportunities in this one. I think if it fills the gap and it gets down in the low 90s, it's a screaming buy long term. Wave, nice move off the low, popped out, pulled back, backing and filling now, forming an ascending wedge. Target at 7 and 8 down the road if you could pop above 4 3/4. And finally, Zixi, a personal position of mine. I'm just not happy with the pullback, but many thin stocks really got hit hard this week. It's right on support here. If I can hold it, I'm looking for 11 and 14 eventually. Let's look at the longs. We got some boxes of shorts to show you. These are going to look ugly to you, folks. So we had a big top of the line right, came down in front of the bear flag, talk about a perfect shorting opportunity. And then another one, and another, and down goes Frazier. And this one looks awfully ugly. I don't know how far they take it down. It wouldn't shock me, though, if eventually it made a move down there 135. It's a long way from here. So let's see what happens now that it's broken. Ambarella. Hidden shoulder top breakdown. There's a bear flag shorting opportunity. Another one there and another one there. Then it finally tried to rally back up again, but couldn't get out and rolled over from the wedge and broke down. Basically, I'd have to say my target remains about low 40s. At core, a new one I found. Breakdown of this trend line and the topping pattern and failed and rolled over and took out the lows. If this should take out 68, this could plunge, and I mean down in the 50s and 40s. Avient, massive top breakdown, snapback, rollover hard. Target 30. CareDX to CDMA. Look at this chart. Perfect parallel declining channel. Once the breakdown here occurred in that bear wedge form, that's where I said this is a short at 50. Made it down to 16. It looks like it could be a $12 stock. Dollar Tree. Massive top formation. Looks like a head and shoulder, left shoulder, head, right shoulder, or something of that nature. Here's your breakdown, and there's a perfect bear wedge. That's why I put it out. Unfortunately, of all the stocks I put out as a short, this was up 1.4% on Friday. Doesn't mean it's going to rally. It just means that it had a good day. If it breaks here, you're looking at 128, and then way down here at 105. Estee Lauder, breakdown bear wedge, and then a 1, 2, 3, 4, 5 wave decline before that. Large 1, 2, and the breakdown on Friday, dropping another 589 or some odd percent. Let's see, support right there. Any further damage from this one? And you can see where it might go. Check this out. 208, 185. Pretty vulnerable looking to me. FVRR. Look at this baby. Massive top breaks right there. Runs a bear wedge, a bear flag, a bear wedge, a bear wedge. A big basing pattern that turns out to be a bear consolidation. We break here, lots of room to plunge. Look for this one to be low 20s, high teens. GPS, breakdown, bear flag. Another one, and a large wedge, it's rolling over. You know, I don't know why the gap stores ever got up into the high 30s, but at this point it's 8 and looking like it wants to be 5, 6. Garmin, been on my short list for a year and a half. But it broke down a mini head and shoulder top here and then a rising wedge. That's where the breakdown occurred and a bear flag formed. Another one, and another one, and another one, all the way down, starts stepping lower until finally it's not plunging from a high 100, they're 180, 178, down to 82, nearly 100 points. I don't think it's done yet. If it does spike down into the mid 70s, it might be a cover. Gravity, breakdown wedge, break support, mini wedge. This is a tough one because 6 months spending basing out. If it breaks here, it's going to get hammered. Horizon Therapeutics. You can see the down channel. And with this breakdown here, it's now formed another bear wedge. Be careful with this one. That pattern cracks. Look where this one can plunge into. 1, 2, 3, 4. Fifth wave says mid to high 40s. It's currently 63. Medifast breaks down, forms a wedge. Another beautiful tight bear flag. Comes down to my target and bounces, and then starts to slowly leak all the way lower. This one's dropped from 320 to 112 and looks lower. Novavax, hard down. Again, I want to emphasize all these shorts look ugly, but many of them at the bottom of the channel and the bottom of a wave. And I wouldn't necessarily be shorting anything on Monday. I would wait for the market to, give us a better setup opportunity. You can see how Novavax has dropped from what, 200, 300 was the high here. COVID high, 331. It's now 21. That's right, no splits. And it looks like if it doesn't hold here, it'll be mid-teens. Amazing. Overstock. Breakdown, it's a 1, 2, 3, 4, and now that's broken. My target, 17. Pentair. Topping pattern, bear coil, little bear coil, bear flag, double bottom, popped, roll over and stopped. 35 target. Kedal. Massive move. This has been in a bear phase for 2 years, from 270, 80 to 72. The targets are 63, 4, and 59. Tech Traders short swing, Robert Half, I gave it at 99. It's Friday's low, 72-ish. Targets 69, 64, and maybe as low as 60. SITM, little mini head and shoulder, breakdown, snapback. A new downtrend formed until finally the bottom of that channel gave way. It's right at some key long-term support. If this thing breaks here, there's a lot of room to fall. SITM, keep an eye on it. Could be vulnerable for 15, 20. Shutterstock. Breaks the trend line, forms a bear flag. Another large one. Basically, this is a 1, 2, 3, 4. A fifth wave down, could plunge us into the 30s. Trex. Breaks down right there, forms a little bear flag, a wedge, another one, larger one, keeps dropping. 140 folks to 45, and it looks like it could be 35. TTEC, another top, declining pattern and falling away. Upwork, working its way down. Bear flag, bear wedge, another large wedge, and a one there, rollover, and a takeout. Targeting 12 and 9. Workovia, spike up, pull back from a little top, break down, wedge. You can see the channel, it looks lower. 54.5, 45 targets, and finally zoom video from a near 600 peak in the pandemic high of October of 20. It's made its way all the way down to 74 from almost 600, folks. And last week broke down below support. Your next targets are 67 and 55. And folks, that's an exhaustive look at the technicals, the indices, all the underlying technicals, and the ETFs of importance. I look at some longs that look promising, some that don't, some that look very negative or cautionary, and certainly an ugly list of 25 shorts to keep in mind if you think the market's going lower. And folks, that's it for this weekend. Sorry about the delay. I had some technical difficulties, we overcame it. This is HP saying have a great rest of your weekend. Fasten your seatbelts for Monday.